who wrote this is with us now. Romesh Sobti, Managing Director and CEO of IndusInd Bank, joins us. Good morning, Mr. Sobti. One of the analysts we spoke to said called it a miracle set of numbers. I mean, there is no impact of demonetization on your numbers?
No, it's not that, businesses, all businesses were unaffected. And it's also not that we are Teflon coated. So we did see, initially in our businesses, which is one of our major businesses, vehicle finance, where we saw a sudden drop in inquiries, especially on commercial vehicles. But I think the pickup happened pretty swiftly. After the first 10 or 14, 15 days, we saw a very swift pickup because there was inherent demand, for instance, in commercial vehicles. So November was not as bad as we expected, and December also has not been as bad as we forecast, actually. We had forecast lower numbers. Similarly, microfinance, for instance, was affected. Initially, collections were affected, but there also I think the pickup was very, very swift. So collections were not affected, but disbursements have been affected. So some areas have been affected, so it's not that everything is hunky-dory.
No, Mr. Sobti, when we look at the two-wheeler numbers, what we got for December were fairly drastic. I mean, falls of 30, 25% in some cases. Likewise for commercial vehicles. In Ashok Leyland's case, the stock went up on the announcement of the numbers because it was not as bad as the market thought. I mean, the markets were expecting probably a 12-15% fall, and it came in at a 9% fall or thereabouts. But it was a fall nevertheless. So how is it that your CV portfolio has not been impacted?
Yeah, so actually we, during this period, we gained market share, and that's one of the, I think, sort of long-term trends that you will see, that banks never operated in certain areas which were cash dominated. And that's why I think the bank's share in total financing was less. For instance, two-wheelers, only 20% of two-wheelers sold were financed, and the rest was done in cash. Now a larger part of that will come in. So I think there has been some shift in market share from NBFCs to banks, especially in the area of vehicles. So in a dropping market, we increase market share. I think that's the only rational explanation of the fact that our disbursements actually went up quarter on quarter.
Mr. Sobti, good morning. The other interesting bit of your numbers was your margin performance. That's been the best in class, of course, at 4%. Now, with we have the low-cost deposits, of course, because of demonetization, but we have seen lending rate cuts as well. What's the outlook on net interest margins from here on?
Yeah, so our NIM had touched 4% even last quarter, and given the downtrending in cost of deposits, we thought that there would be a slight expansion. But what happened is that while cost of deposits, cost of funds actually went down by 24 basis points, which is pretty dramatic in a quarter. But the yield on assets also fell by 24 basis points. So we were able to we passed on the drop in cost of deposits to customers, especially on the corporate side of the business. And that's why we were able to sustain our NIMs. Otherwise, the trending was that we should have seen a slight expansion.
Money came back, cash, in terms of payment of loans. For many banks, the expectation is that loan between September 30 and December 31st will be flat because loans have been returned. Did you see any return?
No, so we saw the usual, repayments, because many of our businesses are EMI based, so we have large repayments. But in terms of the SBNs, how much SBNs went into repayments, that figure was not very large, about 700 or 800 crores. So we did see some repayments, but they were not unusual in their character.
Okay. Mr. Sobti, good morning. You did mention that most of your retail products, commercial vehicles, two-wheelers, utility vehicles as well, have been growing at a steady pace. And given that you are gaining market share from NBFCs, should we expect to see your asset quality remain under this 1% mark, something that you have been painstakingly maintaining for a very long time?
Yeah, apart from gross NPAs, I think we focused a lot on the total credit cost, because credit cost goes beyond its provisioning, write-offs, and loss on sale of repossessed vehicles. And credit cost we had forecast for the full year at 60 basis points. And last 3 quarters we have stabilized at about 15 basis points. So I think we are 44 in 9 months. So we should be well within that 60 basis points. I would say that this year and next year, we would still stick to that sub 60 basis points credit cost.
Okay, Mr. Sobti, this is maybe not as relevant for IndusInd Bank, but as a banker, your thoughts on whether we could see the NPA problem coming back, especially in the SME and MSME space as we move forward because of demonetization and the lagged impact?
Yeah, I think that this quarter is not going to reflect anything. It's too early for impact to be seen. But quarter 4 and quarter 1 is we've got to see how it actually pans out. So some businesses have been impacted, but you've got to recognize one part. That a typical SME, especially at the lower end of the spectrum, would not disclose the full value of his business on his balance sheet. Right? A lot of it was actually cash. So that part is going to be affected. So I think there will be some impact on the SME sector, but it's too early to say it's already happened. It might impact. We haven't seen anything yet.
Yeah, actually, 2 questions from that. Do you expect impact even on your bank from the SME space next quarter, that is current quarter and next? As well, why did it not show an impact already? After all, that forbearance for recognizing and classifying as NPA was only for loans under 1 crore. There will be a bunch of SMEs and MSMEs above 1 crore. Why wasn't the pain showing in December itself?
There is a spillover effect. So October was a good month overall, and this happened on the 8th of November. So November also it spilled over. December might have shown. Not in our books, but might have shown in the books of many banks. I think quarter 4 will be more validation of the fact whether they are affected or not.
Okay. Just talking a little bit about the breakup of the loan growth. I mean, 25%, if you break that up, the non-vehicle book was very strong, but within commercial vehicles, as you yourself pointed out, there was a slowdown. So the growth was just 10%. What kind of average loan growth can we expect over the next 6 to 12 months from the bank? Especially in some of these, slightly more vulnerable pockets like commercial vehicles?
Yeah, so you split the growth of 25% into first corporate. Corporate also grew 25%. Then on the retail side, you split it into vehicle and non-vehicle. The vehicle grew at 21%, and the non-vehicle part, which is much smaller, grew at about 42%. I think the spread of our retail lending is so sort of wide that we would still be able to sustain, I think, this growth in the region of 20-odd% on the vehicles, because we are seeing a good January already, and the pickup has been there. So December usually is a slow month, but January has been a good pickup. Apart from two-wheelers, I think we are seeing a good shift in market share. So that part, I think, is going to be sustained. The non-vehicle retail is small, so 35-40% growth rates in absolute terms are not very meaningful. The real test of growth is really on the corporate side, and there I think the fact that we have become more competitive in terms of pricing because of the drop in the cost of deposits, number one, and our ability to be more flexible on the MCLR, then I think we are able to sort of get better utilization of limits which we didn't have in the past. So that gives us a slightly more longer runway even on the sort of corporate side. So overall, to answer your question, I think mid-20s is what we are aiming for.
So a final question on the industry itself. A couple of things are going good. What are the kind of lending rates for homes that we are seeing? 8.35 from BOB, 8.5 from PNB, 8.6 from the other biggies, SBI, ICICI. How much more does money get cheaper? And how does that impact banks? Are you going to see a whole bunch of teethering corporates now being able to pay because of a seminal fall in leverage?
Yeah. In fact, I think apart from the short-term aberrations, there are some longer-term themes which are emerging, and one of the themes you talked about, which is the excess, which is the liquidity in the banking system. But I think the beneficial impact goes beyond that. I talked about one, which is the fact that we can now go into those areas which used to be cash-dominated and therefore dominated by NBFCs. The second one is the infusion of deposits and therefore reduction in MCLRs, this and that. I would imagine that refinancing would happen even for certain bonds, because I think MCLR gives you certain flexibility now. So that also is a secular trend that we are seeing. And the third one, I think, which is emerging, and you will see it playing out, we saw it already in December, is that part of this demonetized money actually is going into mutual funds and insurance. And therefore, the distribution part of the businesses for banks also should be an attractive area to actually watch for. As far as the cost of funds is going, I think the transformation is happening very, very rapidly. At the upper end of corporate, of course, it is instant. The demand for credit is not so high, therefore pricing pressures are there. So I think you would see a more secular downtrend in rates, and you're going to also see, I think, a revision of rates on savings banks accounts for all those people who are giving 6 and 7%. So, yeah, I think so. We are also looking at.
I heard that hint from
rates.
Mrs. Bhattacharya that she may touch the savings bank rate, but yeah, then that will mean seminal fall in costs, I would assume. Mr. Sobti, thank you very much indeed for joining us today and giving us such a wide-ranging perspective beyond your bank itself.